Hey everyone, welcome back to Corporate Decoder. Today, O.P.R.X just filed an 8K showing shareholder votes on equity plans, and I'm seeing one proposal fail that might signal trouble. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company boosted their available shares for employees, but rejected a key long-term incentive, and that has me curious. We are diving into a recent filing from OptimizeRx Corporation, ticker symbol O.P.R.X. This report is an 8, which is basically a filing for current events happening with the company. Think of it as a special bulletin. The main event here is the company held its annual shareholder meeting on the 9th of June 2026. And they were voting on some important things. So what did the shareholders decide on? First off, they approved increasing the number of shares of OptimizeRx stock that can be given out as part of employee and executive incentive plans. Specifically, they are adding 1 million more shares. This means the total pot of shares available for these awards under their 2021 equity incentive plan will now be 5.45 million. Companies do this to have stock available to reward employees and executives, often to keep them motivated and aligned with the company's success. It is a pretty standard move, especially for growing companies. Next, the shareholders voted on electing directors. They needed to choose 7 directors, and these directors will serve until the next annual meeting. This is also a routine part of corporate governance, making sure the company has a board of directors to oversee its operations. All 7 nominees, Lynn O'Connor Voss, Catherine Clemmer, James Lang, Patrick Spangler, Mariama Varghese Presti, Gregory Wasson, and Stephen Silvestro were elected. It looks like a pretty decisive win for the board nominees here. Then came a vote on executive compensation. This is often called a say on pay vote. Shareholders are asked to give their opinion, although it is usually advisory, meaning the company does not have to follow the vote, in this case. The compensation for the company's top executives received a good chunk of 4 votes. Out of the total votes cast, around 11.6 million were in favour, while about 895,000 were against. This suggests that, for the most part, shareholders are okay with how the executives are being paid. We already talked about increasing the shares for the equity plan, but this is where the vote results are shown, and good news for the company's stock award plans, this passed overwhelmingly, with over 11.5 million votes in favour and just over 1 million against. Shareholders clearly supported giving the company more shares to use for employee incentives. Now here is where things get interesting. Shareholders voted on another amendment to the equity plan. And this one did not pass. This was a proposal to put in an evergreen provision. What does that mean? An evergreen provision typically means that every year, the number of shares available for awards would automatically reset or increase by a certain percentage. This is meant to ensure there is always enough stock available for future awards without needing shareholder approval each time. However, this proposal failed pretty significantly. Over 7 million votes were cast against it, while only about 5.6 million voted in favour. This tells me that shareholders are wary of automatically increasing the available shares year after year without direct say. They likely want more control over share dilution. This is a pretty big rejection of a strategy that many companies use to manage their stock option pools. For a company like OptimizeRx with a market cap around $99 million and 132 employees, managing share dilution is important. When a proposal like this fails, it can sometimes indicate a lack of confidence from shareholders in management's approach to long-term compensation and stock dilution. In the past, we've seen companies that rely heavily on stock grants without strong oversight face shareholder backlash. It's a sign they want to keep a tighter rein. Finally, the shareholders ratified Grant Thornton LLP as the company's independent registered public accounting firm for the fiscal year ending the 31st of December 2026. This is basically a vote of confidence in the auditors who will be checking the company's financial books. This too passed with overwhelming support, with nearly 15.7 million votes in favour and very few against. So, the auditing firm is good to go for another year. As for the exhibits or attachments to this report, the main one is Amendment Number 2 to the OptimizeRx 2021 Equity Incentive Plan. This is the actual document detailing the changes we've discussed. Looking at the bigger picture for OptimizeRx, the market seems to be aware of some recent challenges. Headlines from May talk about the stock being down 30% in a month, and there was a lot of discussion about whether investors should hold or sell. The company's stock has also seen a significant drop from its 52-week high. The rejection of the evergreen provision, especially after a pretty substantial increase in available shares, was approved. Suggests shareholders are feeling a bit protective of their stake. They are okay with granting more shares for current incentives, but seem to be pushing back against an open-ended automatic increase that could potentially dilute their ownership over time without a clear justification each year. This could be a sign that investors are looking for more scrutiny on how the company plans to grow and manage its capital structure moving forward. My biggest concern is the market's reaction to this failed provision. While shareholders approved the 1 million share increase, rejecting the evergreen aspect indicates a clear message. They are saying yes to giving management more tools, but no to a blank check for future dilution. It implies a need for greater transparency and justification for ongoing share issuance. What I'm actually looking for is how management responds to this clear signal from their investors in upcoming quarters. Will they adjust their long-term equity strategy, or will this become a point of ongoing friction? Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.